Back to thinking of mega cap tech as defensive, quote unquote, safe places to be?
Yeah, interestingly enough, as we go through this upheaval in the banking markets and we're seeing credit standards get tougher, you're going to want to be investing in companies that generate cash, are self-sustaining, don't have to tap the debt markets. Mega cap tech suits exactly that parameter.
What's so interesting, and Mike Santoli sitting here too, is that that's exactly the playbook that nobody expected was going to work this year, but has surprised investors that tech has been good, that what worked in 22 has not worked in 23. And here we find ourselves talking about it again.
To a degree, and I do think it all is about the sort of cash-rich, self-financing, dominant tech franchises as opposed to lower quality, not yet profitable tech. So you have to make those distinctions. And so they are being bought for the stability, but also at this time when nobody's afraid as much of rates in the economy running away from you, so therefore cyclicals, maybe you have a little question about. So, and maybe the valuations, maybe not Microsoft aside perhaps, but the valuations have come down to a point where you don't have to make very heroic assumptions about growth expectations from here, the way they were in 2 years ago.
And here you go. I mean, there's Microsoft up 1 2/3%, Ankur, and some of these other ones are as well. Microsoft, one of the stocks you really like out of this space, right, along with NVIDIA?
Absolutely. And in part because the cash generation potential of the business, regardless of the economy and the recurring nature of this business model. I would also highlight that tech had a lot of the earnings cuts already.
Yeah.
So we saw a majority of the earnings cuts through the last 12 months. And so I would say we're 80 to 90% complete. And we have 10% to go versus there's other parts of the markets that we're just starting, like some of the industrials names.
What do you think the Fed's going to do next week? I want everybody's opinion on this because it kind of matters more than anything else, I think.
Yeah, I agree. I think the Fed should pause. Last Monday, everything changed all at once everywhere. And that's a change in your data. And they should pause. Will they pause? I don't know. And I think I agree with Jeremy in that if they do pause, I think it shocks the market because everyone will say, whoa, what are you seeing in the market today?
How would it shock people to say that when we're like, duh, aren't you seeing this? Rather than what are you looking at that has us so scared? It's like we just had this bank shock. Nobody truly knows what might be next, lurking under the surface. They really risk that?
Historically, they've looked at backward-looking data. And we hope that they will look forward as we've had this, this upheaval in the banking market.
Look, I don't think it's an easy call. We don't know what the financial conditions are going to be between here and there. I think they would love for the conditions under which they can go a quarter point. Right. And that way it seems orderly. It seems like we laid this process out. We put a button on the whole thing exactly 1 year after we started tightening. OK, now we can stop and pause. I mean, you also had Jay Powell on the record for no good reason saying we prefer not to pause and then resume hikes if, down the road. In response to questions.
I know, but he could have also said, well, we prefer not to blow up the banking system,
right.
too.
My point is there's no reason to kind of lock yourself into one cadence necessarily, except that they like the idea that they're being transparent and they're being kind of strategic about all this. And I agree, they have not wanted to anticipate a turn for the better in the data. So that's why they've been fixated on what was the last 3 inflation reports, right? So that doesn't give them the ammo to pause, but I think the rest of the world has. And so we'll see.
You're still looking to pick some stocks in this environment?
Sure. I think Kramer said this the other day. There's always a bull market somewhere. And so
where is it now?
We think that in healthcare, there's some really interesting opportunities. There's a small cap company called Natera. And what's interesting about some of these businesses is they're completely idiosyncratic. They have their own catalyst path that will allow for appreciation in both the earnings and the revenue potential. And given that it's healthcare, they are this Natera in particular is non-economically sensitive. So what they do is they do oncology screening, and they just got approval and for the screening test, which allows for revenue and earnings growth.
All right, I got to leave it there.